we're going to be focusing on leaving the right legacy, which is, of course, a not so subtle reference to the estate planning module in Right Capital. This is a topic I always love getting the chance to talk about. One of the things that makes Right Capital so valuable as a planning solution is its ability to span the entire duration of a client's financial life and the entire range of planning conversations that might occur with clients. Of course, retirement is a big focus in Right Capital, along with making sure that clients are able to fully fund all of their goals and so on. But the estate module is where we can take a look past the end of our clients' planning horizons, those assumed dates of death within Right Capital, and start to better understand the flow of assets from one client to the other, and then eventually to the client's heirs, or in some cases, to charity. We can see the impact of things like probate and estate taxes and other fees on a client's estate. And there's a number of trust strategies we can implement as well, with the ultimate goal of setting clients up for success, helping them feel confident that the assets that they've worked so hard to accumulate during their lives will actually go to the people they care about the most. So we're going to dive into all of that during the presentation today. Before I switch over to my Right Capital login, let's take a quick look at our agenda here. We're going to start by taking a look at some of the important settings and assumptions, specifically those that have an impact on the estate analysis. We're then going to be touching on data entry tips for things that can potentially impact our estate analysis, of things like personal gifting, of course, trusts as well, which can be entered into the net worth area and can potentially impact a client's taxable estate. We're then going to dive into the estate module in Right Capital, where we'll cover the estate planning and beneficiary checklists, as well as the estate analysis flowchart. So we'll make sure that we have a solid foundation there in understanding some of the information displayed within the flowchart, especially. And then lastly, we're going to dedicate some additional time specifically to proposing trust strategies within the estate analysis. So we're going to be highlighting some relatively recent product updates here that now allow you to propose future trust strategies for certain types of trusts, and also have a bit more control over the cost basis as well. So as always, we will be doing a live Q&A at the very end of the presentation today. If you do have any questions as we're making our way through, please don't hesitate to write in using the questions field in the GoToWebinar control panel. You can expect the content I have prepared today to run for about 40 to 45 minutes, and then I will be sticking around to answer as many questions as I can. One last reminder for those of you who might be a little bit newer to Right Capital, these webinars are recorded, and we do post and store these recordings within the Right Capital Help Center. So when we get to the Q&A, I'll also show everyone where you can find the recording of this webinar in the future if you need to watch this back at any point. That being said, it's time to dive in here. So allow me to switch screens over to my Right Capital login here. So here we are within my Right Capital Advisor portal. And getting right down to business here, we're first going to be looking at some of those settings that are going to be important to be aware of and to keep in mind when it comes to estate planning in Right Capital. So as a reminder, Right Capital does give you control over your settings and assumptions at both a global level here in the advisor portal, as well as at the client level within the settings of each client plan. So a lot of these settings we're going to be looking at today are going to be at the client level within the case study I've curated for today. But there are, of course, some global settings to be mindful of as well. This, of course, includes your preferred asset return assumptions, which are going to impact how a client's assets accumulate over time, as well as the inflation assumptions, which you can also set at a global level here as well. When it comes to estate planning in particular, the tax inflation rate is one that I always like to highlight. This is actually going to impact the estate tax exemption threshold as we project that out into the future. So, just using my 2.5% here as an example, that $13.6 million exemption that we currently have under TCJA is going to increase annually by 2.5% over the duration of my client plans. So definitely keep tax inflation in mind when it comes to that estate tax exemption. So just to summarize here, global assumptions are always important, and you can adjust all of that information here in the Assumptions tab of the Advisor portal. But as I mentioned, we're going to be looking at the rest of these settings at the client level. So let's dive into our case study for today. We're going to be looking at a joint plan for Cynthia and Larry Brown. Perfect. And just to get us all acquainted with these clients quickly, let's pop over to the Profile tab and just take a brief look over the net worth, which is really what's going to be most relevant for our conversation today. We can see that we have a relatively high net worth household here, sitting at a little over 17 million in current net worth. And that's going to allow us to illustrate the impact of things like estate taxes on this financial plan and so on. So, we have all of our clients' investments here. We've got quite a bit of property value as well. All of these assets will, of course, feed into the estate module and factor into the client's total estate. So I just wanted to quickly take a look here so that we all have an idea of the type of client household that we're working with today. With that out of the way, I am going to pivot into the gear icon settings tab here so we can finish our review of some additional settings that are going to be important to the estate module at the client level here. There are really two primary things I want to look at in addition to, of course, the return assumptions and the inflation assumptions that we touched on. The first of these is going to be the tax law setting, which can be found in the tax assumptions subtab here within our settings. This is going to be the very first setting you'll see listed in the upper left of this page. And as the name suggests, this is going to allow us to choose which tax law to use within this client's financial plan. Do we want to use the Tax Cuts and Jobs Act with an assumed sunset at the end of 2025? Do we want to use TCJA with no sunset and have that stay in effect throughout the client's plan? Or do we want to use 2017 tax law? And again, this is going to have an impact on that estate tax exemption threshold. TCJ, of course, essentially doubled that exemption amount. So depending on what we choose here, we'll certainly see some changes within our plan. These options will also have an impact on the income tax bracket thresholds. So even outside of the estate analysis, we'll see some changes that will impact our clients' ending assets. The default selection in RightCapital for this setting is this option here, TCJA with a 2025 sunset. So with this option selected, starting in 2026, it does revert back to 2017 tax law, which is going to affect both the income tax brackets as well as that estate exemption. In addition to the tax law here, the second thing I want to make sure I touch on is the account assumptions, which has its own tab here in the settings. And this area, this is going to be crucial for estate planning in particular, because this is where we can tell RightCapital what percentage of each account is going to be left to a surviving spouse. So we have our breakdown of the different account types here for both clients within our plan. And using this first column, we can tell the system, if one client were to pass away first, what percentage of each account would be passed on to their spouse. So, just as a quick example, maybe for Cynthia's 401k, maybe only 50% of that will be going to Larry here, and the other 50% will be going somewhere else. If you're doing estate planning for blended families, couples with former spouses and children from prior marriages and things of that nature, this page is going to be really important. This gives you quite a lot of flexibility over exactly what percentage of a client's assets will be retained by the surviving spouse within both the retirement plan as well as the estate analysis. So again, the tax law and the account assumptions here are the two things I wanted to touch on specifically that have a big impact on the estate module. Of course, just to wrap things up here in the settings, I do want to quickly just mention that methodology settings in this first tab here are of course going to be important as well. These settings essentially determine how things are calculated within a client's future cash flow projections. And while they primarily impact the retirement analysis and retirement cash flows, they can also indirectly impact the estate module in that they will affect how much in assets the clients are left with at the end of their lives. Just as a quick example, maybe we have an allocation method that's set to same allocation for all years like this. If these clients are very aggressively invested, this is potentially going to result in a higher amount of assets feeding into the estate module. As a reminder, the estate module is based on the proposed plan in Right Capital coming from the retirement analysis area. So in a lot of ways, creating a robust retirement proposal with, of course, a robust set of methodology settings here is really the foundation of the estate module in a lot of ways. So we did actually just do a deep dive on methodology settings in last week's webinar. So if you're curious and didn't get a chance to tune into that presentation, I'll be sure to show you where you can find that recording in just a bit here. Perfect. So that covers it for our settings and assumptions. Next, we're going to dive into our profile area and just take a look at a little bit of data entry here. We won't be spending too much time here, but I do want to review specifically how to enter gifting goals, both personal gifting and charitable giving, which of course can have an impact on our estate analysis in various ways. And I also want to take a look at entering trusts into a client's net worth section, just to review how you can do that and what that process looks like in Right Capital. So let's start with gifting here. That's something that can be incorporated into a client's plan via the profile goals area. And there are two dedicated goal cards that we can add to a plan here, one for personal gifts and another for charitable giving. So starting with personal gifting, this is, of course, it can be a strategic method to reduce the value of an estate prior to someone's passing. The main thing to be mindful of here in regards to estate planning is that any gift to a single individual in excess of the annual gift tax exclusion, which is currently $18,000 per recipient for 2024, that will start to eat into the client's lifetime gift and estate tax exemption, which could ultimately result in higher estate taxes reflected within the estate analysis. Other than that, the data entry itself for personal gifts is relatively straightforward in terms of entering the annual dollar amount here, choosing of course, the owner and the recipient, deciding between cash and appreciated assets as the asset type here, and then ultimately just dialing in the timing of this personal gift, when that's going to begin within the plan and how frequently that's going to occur. Things do get a little bit more nuanced when it comes to charitable giving. So let's take a quick look at that card here. Charitable giving, of course, in addition to personal gifting, can be another way for clients to reduce the size of their taxable estate during their lifetime. But in addition to donating cash and appreciated assets, this card can also be used to model contributions to and distributions from a donor advised fund, removing those assets from the client's taxable estate. So this card actually does both. You can show contributions to the DAF by selecting cash or appreciated assets here as the asset, and then by choosing donor advised fund as the recipient. And then we can flip-flop that and show distributions from the DAF by selecting donor advised fund as the asset. And then that will lock in charity as the recipient here. And of course, those distributions will reduce the balance of the DAF within the plan as well. In the estate analysis, once we get there, we will see the donor advised fund in the out of estate section of the estate analysis. And we'll also see the dollar amount that's going to charity as a result of that. So for clients who maybe have some more philanthropic goals at the end of their life, who want to make sure that their assets are going to the causes that they care about, this can be an important piece here. The last thing I'll say in regard to gifting goals when it comes to estate planning in particular is that, as I mentioned, the estate module in Right Capital does look at the proposed plan. So for those of you that might be a little bit newer, everything we're doing here in the profile, this is contributing to the client's current plan. This is essentially the initial data entry that's going to serve as the foundation for the client's financial plan, and it represents their current financial picture. But all of these data entry cards, including personal gifting and charitable giving goals, can be added to a client's proposed plan here in the retirement analysis section. And that's going to be picked up and incorporated into the estate analysis within the estate module as well. So, maybe these clients aren't currently making charitable contributions or personal gifts, but maybe these are something you'd like to recommend and factor into a proposed plan. That's something we can do within the action items here by clicking the edit button in the lower right corner and then clicking add new items at the bottom of this drawer here. We can find all of the same goal cards, including our personal gift and charitable giving goals, and the data entry will be exactly the same as in the profile. So it's just important to remember that when it comes to the estate module, any changes made to our proposed plan here will be factored in to the values that we see. To put a bow on gifting here, we are going to segue back into the profile area and take a quick look at the net worth section here, which is where we can add donor advised accounts along with their current balances, as well as trusts to a client's plan. So both of these things are added as investment accounts by clicking add account investment. I do already have these added here in my investment section. So donor advised funds, relatively straightforward input here. You can add that investment account and then simply select donor advised account as the account type here. That's going to be included within the estate analysis and shown outside of the client's taxable estate. And then when it comes to trusts, the process is slightly different. So let's take a quick look here. In order to make sure that our account is treated as a specific type of trust, the very first thing we need to do after adding this account is select trust as the owner of the account. And what that does is that's going to change the options available in the account type menu to different trust types rather than the individual investment account types that are owned by the clients. So we can enter these here as part of the client's current plan if they already have these trusts set up. So we're not going to dive too deeply into each trust type here just for the sake of time today, but to provide just a quick overview here, most of these trust types will remove assets from the client's taxable estate with the exception of a revocable trust. These assets will be protected from probate costs, but are still included within the taxable estate for estate tax purposes. The rest of these trusts, like the credit shelter trust, for example, these are irrevocable trusts, and we'll see these assets held outside of the client's taxable estate within the estate module. Many of these trust types will also allow you to set up income streams. So maybe these trusts are held outside of the estate, but are distributing money back to the clients for either the duration of the client's lives or for a fixed term. Some of these are going to be grantor trusts as well, and for those we're able to specify the grantor here at the top of the data entry. So these allow you to choose the grantor. We can choose the grantor, and then we can choose if the income term is fixed or lifetime. For grantor trusts that do have a fixed income term, if the grantor passes away before the end of that term, the value of the trust will re-enter the client's taxable estate. So that's something to be aware of when it comes to grantor trusts in particular. That being said, you have a lot of flexibility here to model various trust scenarios within Right Capital. And by playing around with different what if scenarios, adjusting things like the planning horizon for each client and so on, we'll be able to see the implications of that on the client's estate situation. One additional note here, there are many different types of trusts in reality, some of which you won't find as specific options in Right Capital. So in those instances, we generally recommend using the irrevocable grantor trust for invested assets as a sort of generic catch-all for unsupported trust types. So that's just a something to keep in mind if you're looking to add a specific type of trust that we don't have available here. There are also a few trust types that I want to demonstrate you're able to select as the owner of properties and insurance policies. So just to take a quick look there, for example, if we look at the primary home, you'll find a trust option here for the owner, and that will populate with a couple of specific trust types as the owner of the property. And then in addition to property insurance policies as well, you'll be able to specifically select an ILIT, an irrevocable life insurance trust, as the owner of these something like a whole life policy here. So just wanted to point out that those are options as well. The last thing I'll say about trusts here is that, of course, there are going to be differences in terms of tax treatment and so on when it comes to each of the different trust types in Right Capital. And if you're ever unsure, how something is being treated tax-wise or what some of the specifics are related to a certain trust type, we have some great resources in our help center, outlining all of the different trusts and strategies for each. There's an article in our help center titled Trust Overview that has a great breakdown of information. So I definitely recommend checking that one out for more details on trust types in particular. The next thing on the agenda for us today is the estate module in Right Capital. So we're going to spend just a couple of minutes first looking at the estate checklist and the beneficiary review, which are relatively simple but still very essential tools for estate planning. And then we're going to jump into the estate analysis for the remainder of the presentation here. Starting with our checklist here, this is by default the first thing you'll see upon opening the estate module. And this is an easy way for you to track important information and the creation of important estate planning documents directly within the Right Capital financial plan. So we can denote information surrounding the client's will, for example. Firstly, has the will been created for each client? If yes, we can check the box in this row, and some additional fields will populate here, allowing you to indicate who has been named as the executor and as the guardian within that individual's will, as well, of course, when this document was last updated here at the bottom. So we can go down the list here with our clients and do the same thing for power of attorney and the rest of these documents. And as we check these boxes, the fields will expand, and you can hover your mouse over each area and click this pencil and paper icon to enter that information into the the field here. So again, this is a simple tool, but it can be very valuable for clients in that it's going to store all of this information all in one place right within the client's financial plan. I'm sure we all have a family member or someone we know that tends to write down important information like this on a piece of paper or in a notebook potentially, and then has a tendency to lose said notebook in their house somewhere, which of course we don't want, especially when it comes to something like end of life planning. So this can be really helpful for those kinds of clients, especially having everything tracked and stored within a living, breathing financial plan that can be accessed on demand at any time. Maybe you're even using Right Capital as a way to store some of these documents themselves within the vault. Something that some advisors will do is use our bank level encrypted vault feature, which of course can be used to share documents with clients and vice versa, to store estate documents. You can add folders here and have either the client upload these documents if you've invited them to have access to their plan, or if they've already passed those documents along to you, you can upload those documents here yourself, and those can be stored within the plan as well. So, just an additional layer, it's something else we can do when it comes to estate planning within Right Capital. Something else I always like to highlight here within the estate checklist is the action items at the bottom of the page here. If you or the clients need to leave any notes or reminders related to any of this information, you can do that here by clicking the notes icon in the lower left. And the other feature here is that by clicking the edit button in the lower right, you as the advisor have the ability to actually edit this checklist and determine which items are shown. So by unchecking certain items here and clicking save, you can hide items from the checklist that might not be relevant to clients. Perfect. Moving on to our beneficiary review here. We're presented with a very similar page with similar functionality. And of course, as the name suggests, we can use this to keep track of the primary and contingent beneficiaries for the various accounts and assets within the client plan. So just like our estate checklist, we can use this list to ensure that beneficiaries are up to date for all of our accounts and store that information going forward within Right Capital. Hovering your mouse over one of these accounts is going to highlight it blue on your screen. And when we click on that, it's going to allow you to select the primary and contingent beneficiaries. So just to quickly review the options, you're able to select individuals within the plan here. I've got the co-client as well as the 2 children in this plan. You can choose between charity and trusts as well as all children and all grandchildren. But in particular, I always like to highlight the custom option here, which allows you to type in whatever you would like. So this is useful because it allows you to enter percentages. Maybe a certain asset is going to be broken into percentages, and you want to indicate exactly who that's going to in the beneficiary field. Maybe we can do something like that here as well. Perfect. Just like the estate checklist, we also have the ability to both leave notes in the lower right corner, or lower left corner rather, of the action items here, which is useful if you need to add any reminders to update beneficiary information for the clients. And again, you can click the edit button in the lower right to hide specific assets from this list as well, if there's maybe something we don't need to see here for any reason. Perfect. So that brings us to our estate analysis here, which is where our projections live in the form of the estate flowchart. And whereas the estate checklist and beneficiary review are more standalone areas that are categorical in nature, this analysis area is pulling information from the proposed plan in Right Capital. And this is where we can start to see in future dollars how money is flowing from the first client to the surviving spouse and then to the client's heirs. So this is where we can really start to address that all important question of where is my money going after I pass away. So first things first here, the timing of all of this is of course directly tied to the planning horizons that you have entered for each client within your proposed plan. I am currently using the default of age 90 for each client here, which we can see in my action items. And in this case, Larry is a little bit older than Cynthia, so he is passing away first within our flowchart. So starting with Larry here, and we can click into each of these tiles to see things like how much is Larry's net worth, and that allows us to see a breakdown of all of the investments, real estate, and other assets that make up the total value of Larry's estate. We can also zoom in on things like taxes and fees, which is, can allow us to see things like probate and funeral expenses, as well as any estate taxes that are being incurred here. For the first client who passes away, we're likely not going to see any estate taxes, as that's going to be transferred onto the co-client inheriting those assets due to that unlimited marital deduction. You'll generally only see estate taxes here if the first client to pass away is leaving a significant portion of their assets to individuals other than their spouse, which, as a reminder, you can indicate within a plan using those account assumptions in the settings that we looked at earlier. Moving on here, as we make our way down this page, we can see Larry passing away and passing his assets on to Cynthia. We can then see Cynthia's estate along with the breakdown of assets. And again, we can also take a look at our taxes and fees, which in this case is incurring some estate taxes. So our federal estate taxes, these are being calculated by looking at the dollar value of the client's gross estate in future dollars at the time of their death. And it's then looking to the estate tax exemption threshold, which again is dependent on the tax law that you've implemented within the plan, as well as the tax inflation rate, which is being used to project that threshold out into the future. So everything that we looked at earlier in terms of settings sort of comes full circle here. Something significant that I want to make sure I touch on at this point is, I believe as of February of this year, there were some significant updates made to the calculation engine in Right Capital to be able to account for state level estate taxes as well. There are, I believe, 12 or 13 states that have their own additional state level estate taxes in addition to federal estate taxes. And if your clients are located, in one of those states, those state-specific estate taxes will be incurred within the estate module here, assuming that the client's taxable estate is in excess of that exemption amount. Every state that implements this sort of thing tends to have their own rules when it comes to, the exempt amounts and the tax rates, and all that information is built into Right Capital on the back end and will be implemented automatically within the estate module here. So I have these clients located in the state of Connecticut, which is one of the states that has, state level estate taxes rather. The main thing to keep in mind is that this will look to the state that the client is located in at the end of their plan to determine whether or not there are state level taxes here. So the main thing to keep in mind is that if the clients live in a location currently that does have state level estate taxes, but maybe within the plan you've modeled something like a primary home relocation and you have them moving to a state without state level estate taxes, that second state that they move to within the plan is going to be the one that we use for this calculation. So if you have a client moving from Connecticut to Florida, for example, we wouldn't see any estate taxes here. So just something to keep in mind if you are expecting to see state level estate taxes and there's nothing populating here, just double check to make sure what state the clients are located in at the end of their client plan. To wrap things up here with our flow chart, we can then see after all the taxes and fees are applied, the total dollar amount being passed along to the client's heirs at the very bottom here. And if there are any assets being held outside of the taxable estate, we can see those on the right-hand side here. Any irrevocable trusts, for instance, or in our case, a DAF. We can see ultimately where those assets are going as well, whether that's to the client's heirs or to charity. I do want to touch quickly on the action items here as well. Now, this is where we can start implementing some what-if scenarios and see the impact on our estate flow chart. There are a couple of default items here that allow you to edit life expectancy, funeral expenses, and the probate expense percentage. So we can use these to model things like, what if Larry outlives Cynthia potentially? We can maybe increase Larry's planning horizon, click refresh, and then it's going to flip-flop immediately within the flow chart here, and we can see Cynthia passing away first in this case. We can also use this to see situations where grantor trusts are involved, what things might look like if the grantor passed away unexpectedly prior to the end of that fixed income term, like I mentioned, and what the impact would be of those assets moving back into the taxable estate. If you want to see the impact of things like increased funeral expenses and probate expenses on a client's flow chart here, you have the ability to manipulate these items as well. Do keep in mind that everything we're working with in the flow chart here is in future dollars. So, as just the funeral expenses as an example, this is a today's dollars amount that is entered here, but what we see in the flow chart is a future dollar amount. So, all of these values are inflated. For high net worth clients that are on the younger side, especially, you can expect to see some pretty hefty dollar amounts here as these values inflate over the course of 30 or 40 years. In addition to these 4 default items, there are some additional action items that you can add to the screen here by clicking the edit button in the lower right corner. And here we can add things like a cumulative gift amount in excess of the annual gift tax exclusion, which will reduce that client's estate tax exemption threshold. You can use this in tandem with gift tax paid to model scenarios where clients might be making gifts in excess of that annual exclusion, but are maybe choosing to pay those taxes in the year that those gifts are being made. So cumulative gift will increase estate taxes, while gift tax paid will reduce estate taxes. There are even items here to account for DSUE amounts, which is of course deceased spousal unused exclusion that a client might have from a previous marriage. So If someone has a former spouse who passed away and they didn't use their entire estate tax exemption, you can use this input to increase the client's exemption by a specific dollar amount. And this is probably going to be more relevant for single clients, but even within joint plans like we have here, this is always an input here, if you need it. In summary, lots of flexibility to play around with different scenarios by, toggling on some of these additional action items. I do want to touch on one more thing today, which is going to be proposing trust strategies here in the estate analysis. So, as I said, this is the final function of the action items, proposing trust strategies for our clients, which allows us to see the impact that will have on the estate analysis. So we're going to quickly walk through the process of inputting these. And this is also where we're going to take a look at some of the other tabs here within the estate analysis, in addition to just the flow tab here. So firstly, the purpose of implementing these trust strategies here is, as you might imagine, so to hopefully minimize the impact of estate taxes overall by moving assets outside of the client's taxable estate. And while existing trusts can be entered into a client's net worth, as we saw, the estate module here is where we can enter hypothetical trusts. So by clicking the edit button in the lower right of our action items here, and then by clicking add new trust in the lower left, we can propose all of the same trust types that we saw back in the profile net worth section. So let's pick one of these here. Let's say that we want to propose that these clients take advantage of, let's do a SLAT here, a spousal lifetime access trust. This is something that allows access to assets while helping keep those assets outside of the taxable estate. So if you're at all familiar with proposing annuities in the retirement section, what we're looking at here is actually relatively similar in terms of data entry. So I've added my SLAT here by choosing that from the list. This particular trust type is a grantor trust. So the first thing that we can do at the top here is specify the grantor. We can then specify the asset value, which is how much we want to transfer into this trust. So let me enter a nice round number here. The dollar value that we enter here, this is going to be moved from the client's taxable investments within the client's taxable estate to our proposed trust type outside of the estate. So if we want to model this trust paying out income, we can reflect that here as well by manipulating the income term and then the income type. So maybe Cynthia is the spousal beneficiary of this trust. We can enter, let's say, a fixed dollar amount of $25,000 for our income stream. And something that I want to make sure I highlight at this point is that you can now choose a funding year for these trust proposals as well. So instead of funding this trust immediately, we can actually specify exactly when we want this to occur in terms of a calendar year or a specific client age. This was an update that was rolled out very recently. Previously, it wasn't possible to choose a future year like this, but our product development team takes advisor feedback very seriously, and this has been a popular request for quite some time. So we were very excited to be able to implement this and to roll this out to advisors. One additional thing is that this update did also add the ability to specify the cost basis ratio for our proposed trust as well. So when you choose a future year here in the funding area, it will let you choose between the pro rata rule or specify cost basis ratio. So let me enter 2030 for my funding year. And then within the cost basis field that appears, we can choose if we'd like to specify a cost basis ratio. The pro rata rule essentially just means that the cost basis ratio of our proposed trust is essentially going to match the cost basis ratio of the taxable bucket of accounts that are being used to fund the trust. But if you'd prefer, you can now use this new option to specify the basis of the money being used to fund the trust, and enter an exact percentage. And this will, of course, impact the capital gains taxes generated by the trust over time. And this is actually something we can track in the trust tab here, which we'll get to in just a minute. So let me finish filling this out here and we can take a look at the impact. Let me make sure our income starts lines up with our funding year. Perfect. And with this trust proposal saved now, we suddenly see some changes within the estate flowchart. And we can toggle our trust strategy on and off here to really see the major differences very clearly. Uh, you know, uh, we can see that by including this trust, we have 4.3 million being added to the out of estate section in the trust to heirs tile here. And if we click on that, we can zoom in and see that that is the slat that we just entered here. We can also see a reduction in taxes and fees occurring as well as a result of this trust proposal, which becomes more evident when we include and exclude this from the proposal here. So we can see the immediate impact on the flowchart itself here in the estate analysis, but this is also where we can start to utilize the rest of our tabs here, starting with the comparison tab. So if you're at all familiar with the comparison tab in the retirement analysis in RightCapital, this tab serves a very similar purpose, the exception being that in this case, we're comparing our estate plan with the trust strategy in green to our estate plan without the trust strategy in blue. So we can see here that the direct impact of this slat on our estate planning summary chart is that the clients are going to receive about 1.5 million more in assets at the end of the plan. And we can see that we have almost 3 million less in taxes and fees as a result of moving those assets out of the taxable estate. We also have a second chart here, a retirement income chart, which is borrowed from the retirement details area of the retirement section. And here's where we can see all of our income sources in retirement, including, if we zoom in here a bit, the distributions from the trust, which are reflected in green here. If I can pinpoint one, that 25,000 we entered for the trust distributions, those are being categorized as other income in green within this chart. So the purpose of these visuals here is A, to serve as the visual backdrop for your estate planning conversations with clients, and B, to start connecting the dots for clients between your recommendations and the value that they provide. I do want to make a quick pit stop in the details tab here. This page provides a similar breakdown of the client's estates that we would find in the flowchart area, but this lays everything out in a more traditional table view, which can certainly be helpful. If you want to look over this information without having to click into the individual tiles in the flowchart to sort of zoom in and see all the dollar values, you can always look over the same information within the details tab here. And as a reminder, this will factor in our proposed trust strategy as well, which we can see highlighted on the right-hand side here under out of estate. Last but certainly not least, we have our trust tab, which will appear after you propose a trust down here in the action items. So with this area, we can actually see a cash flow breakdown of our proposed trust over the course of the lifetime of this plan. We can track the beginning and ending balances of this trust. We can see this trust being funded for the first time in 2030, and then we can track the portfolio return occurring each year. Like I mentioned, the taxes and fees being generated by the trust each year, as well as the distributions from the trust as well. And just to wrap things up here with trust proposals, you can always click back into the trust within the action items here to make any adjustments to the inputs and see the impact on all of the information and visuals here. And you are by no means limited to just one trust here. You can certainly add multiple trusts, whether those are different trust types or the same trust type with different input parameters. And you can toggle those on and off within the action items to see what might be best for these clients. Perfect. So that does pretty much cover it for the content I had prepared for all of you today. But just to summarize, remember to be mindful of settings and assumptions that can impact estate planning conversations. That includes the tax law, the account assumptions, as well as our asset returns, inflation assumptions, and methodology settings. Remember that creating a solid retirement proposal is really the foundation of a sound estate analysis. There are inputs within the plan like gifting goals, donor advised funds, and existing trusts that will feed into our estate module here. And when it comes to the estate module itself, it has a lot of versatility to be as simple or as thorough as you need it to be for the clients that you're working with. It can be used to simply track beneficiaries and make sure that all of the important documents are in place as clients near the end of their life. Or it can be used to propose these trust strategies and navigate potentially sticky estate tax situations for high net worth clients.